Well, Pickens doubts that any OPEC members are going to violate that plan. He says there's really no room to cheat anymore. Ellen, back to you.
All right, Carmen, thanks so much. We're going to stick with this theme right now and continue to talk about oil. It is Wednesday. Is it Wednesday? It is Wednesday. It's time for Commodities Corner, and our commodities reporter Sandra Smith and I are joined by Kevin Kerr. He's editor of Resources Trader Alert, joining us from Stamford, Connecticut. And then in a few minutes' time, we'll speak with James Bauer, Bauer Trading, for a look at the recent surge in agriculture commodities. That's gotten a lot of attention from the hedge funds. Kevin, welcome back. Nice to have you on.
Good to be back. Thanks, Ellen.
All right, Kevin, you have been such a bull. We've had you on several times the past few months. Are you backing down?
No, not at all. In fact, at this point, it's normal for this time of year to see oil pull back. Obviously, we had a light hurricane season, but as we get into fall, as cooler temperatures pile in, as well as with the OPEC cuts, although we haven't heard from the Saudis officially yet, this will drive price higher.
All right, what do you do in the short term in terms of those losses you must be feeling or the squeeze you must be feeling? Do you just hold on, or are you doing some short-term trades?
Well, we do have some December options on, so time is decaying, but, we're just holding on and waiting to see what happens with this OPEC cut, as well as the next couple inventory reports. We expect tomorrow's report, delayed because of the holiday, to show a build as well. But down the road here, as we get cooler temperatures, we expect to start seeing drawdowns in the heating oil and in crude.
Kevin, we're still seeing a lot of weakness in the natural gas market. We're working towards that seasonally strong period there. What should we be looking for?
Well, the same rules apply here. As we head into winter, we're probably going to see more inventory decay, and I think we're going to see a lot less injection into the pipe as producers are way below the threshold of where they would want to be. It just isn't cost effective to keep putting gas in a pipe when it's only at $4. So I think we will see it pop in the next month or two, back up to a reasonable level. And, some pressure was put on the market as well with the whole Amaranth debacle and also seasonal problems as well.
So you said you're not willing to get in that market. You're not building a position there. If this is the case, why?
Well, I'm not long that particular market at this point. I don't think there's a lot of downside, so it's probably time to take a serious look at it. But it's just been a little too volatile for our taste at this time of year. But as we get into fall, we will probably look for opportunities to buy into a rising market.
Let's talk about OPEC. You mentioned OPEC. Why do you think the OPEC announcements or lack of clarity, why aren't they having more of an effect on the market? Yeah,
the big factor here is the Saudis, who, really, they call themselves the Federal Reserve of the oil market. But, bottom line is, without their clear cut from them, I don't think the impact is as strong. And while we expect to see Venezuela and Nigeria and other countries cut, we really need to see the Saudis come out and say we're going to cut as well, and that'll give it some real staying power.
I want to take it out of energy for a second. We've got this big USDA report coming out tomorrow morning. You're in the orange juice market. What should we be looking for there? Are we going to see another cut in the crop by the USDA?
Well, last time I was on with you, we talked about the Steger report, which came out, and it was very bearish, very bullish, pardon me. And we expect the USDA report to come out and show about 148 million boxes. We really anticipate that the real number is more like 126 million. So we're very bullish on orange juice. And we've actually moved our positions into January to take advantage of any winter weather that also might affect the crop, but the crop is really abysmal. I'm going to be going down there in a couple of weeks to take a look myself again. I did a few months ago and really examine it, but tomorrow's report could be key. We expect the report to be a little on the higher side, but actual numbers to be lower.
And Kevin, is this another area where you're willing to just kind of deal with some discomfort? Because you've been an OJ bull also, and those prices off those highs over the past few months.
Yeah, all of these markets have been very volatile, including the grains, lately especially. And we tend to hold on to our options through these periods. That's why we use options rather than futures. In many instances, it allows us to stay in positions a little longer.
All right, Kevin, thanks so much.
Thank you.
Always fun. Kevin Kerr, editor of Resources Trader Alert. So we are going to stick with commodities coming up. Wheat, that's been a real star. Sandra's been talking about it for days and weeks on end. How much longer can that grain rally continue? Also, it's real